It's Thursday, the 29th of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Inflation rears its ugly head as petrol and childcare costs trigger a surge in prices, but interest rates still won't rise for some time yet. That's our main story. Also coming up in today's podcast, New South Wales lockdown extends, though construction workers and tradies get a carve-out. Rio Tinto announces a bonanza dividend, and Spark Infrastructure receives a $5.2 billion offer. Then, stay listening for my chat to Alistair Doak from Mazda about the global momentum building behind electric cars. But first, here's a brief look at markets. Wall Street was mixed overnight, with earnings results and comments from the Federal Reserve driving sentiment. Fed officials said they'd started to discuss when to tighten monetary policy, given the improvement in the US economy. In early afternoon trading, the S&P 500 was up 0.1%, the Dow Jones Industrial Average was down 0.3%, and the Nasdaq was up 0.6%. European markets were stronger, with London's FTSE 0.3% higher and the Stoxx Europe 600 up 0.6%. After hitting a record high on Tuesday, the S&P ASX 200 fell 0.7% yesterday to close at 7,379 points. Most sectors across the bourse were lower, led down by technology and energy stocks. The only sub-index to rise was the real estate index. There was a sea of red among the large caps, led by Commonwealth Bank, BHP, Wesfarmers and Afterpay. Oil prices were up about 0.5% overnight. Gold prices were flat, and the Aussie dollar is trading at 73.5 US cents. Inflation has been pretty much in control for more than a decade, but during the 12 months to the end of June, prices jumped nearly 4%, the highest rate since 2008. Inflation, along with wages, are the key ingredient in determining what the Reserve Bank does with interest rates. The Bureau of Statistics figures released yesterday came amid a number of economic growth downgrades, with some market economists now tipping the national economy to contract by more than 2.5% this quarter on the back of the Sydney lockdowns. Prices jumped by 0.8% during the June quarter, taking the annual inflation rate to 3.8%. The increase in the headline rate reflects the unwinding of free childcare 12 months ago and much higher fuel costs on the back of rising oil prices. But the impact of COVID was seen elsewhere also. Vegetable and fruit prices were higher, in part due to bad weather, but also because fewer pickers were available. Medical and hospital services were more expensive, as were insurance premiums. The underlying measure of inflation is more important than the headline number, though, because it strips out the impact of volatile price movements. The news on that front was much better. Underlying measures suggest prices have picked up, but not too much. The annual underlying rate is the number the Reserve Bank wants to get back into the 2 to 3% range in a sustainable manner before it does anything on interest rates. During the June quarter, the underlying rate was 1.6%. The lockdown in Sydney is the wild card in the inflation story, as it is in consumption and the employment market. While prices are rising slowly, the lockdown could halt any increase in the short term as the economy stutters. Certainly, many market economists now expect the economy will contract during the current quarter. Commonwealth Bank said the economy will go backwards at a 2.7% clip. The bank's economists have also changed their forecast for the next rise in interest rates, pushing it out from November next year to May 2023. AMP Capital Chief Economist Shane Oliver expects a contraction of closer to 2% this quarter. The inflation figures at first glance are worrying, but they will be transitory and the underlying number is low. The inflation numbers, along with the Sydney lockdown, suggest that forecasters who believe interest rates won't rise before 2024, such as the Reserve Bank, might be on the right track. In a moment, the rest of the news you need to know this morning. In overseas news, US President Joe Biden is close to striking a deal with Congress on his $1 trillion infrastructure bill, which would deliver extra spending for roads, bridges, waterways, and broadband networks. If successful, it should provide a boost to the share market and economic growth. It was a big 24 hours for US earnings. Alphabet, parent of Google, recorded quarterly revenue of $51 billion, well above expectations, sending its share price higher. Apple said better than expected iPhone sales pushed revenue to $81 billion during the quarter. Ironically, given the state of relations between Washington and Beijing, the biggest rises came from Chinese sales. And Microsoft said fourth quarter sales were up $46 billion. So, for 3 months, Google, Microsoft and Apple combined sold about 240 billion Aussie dollars worth of goods. And NBC has paid hundreds of millions of dollars to broadcast the Summer Olympics in the United States. It's the main reason the swimming finals are held in the morning in Tokyo, because that's prime time in the US. But for the first 3 nights of competition, viewership was down 30% compared to Rio de Janeiro in 2016. Locally, the Commonwealth Government has revamped its support package for Sydney businesses and individuals, as the state government extended stay-at-home orders for another 4 weeks for the Greater Sydney region. More than 460,000 people have already claimed disaster payments, and under the new federal package, eligible businesses will be able to claim up to $100,000 in weekly payments. Individuals will be able to access $750, up from the current level of $600. Prime Minister Scott Morrison also outlined a path to normality of sorts, saying every Australian would have the opportunity to be vaccinated by the end of the year, and lockdowns will be a thing of the past by 2022. There are another 177 cases of COVID-19 reported in New South Wales yesterday, of which 46 were fully infectious while in the community. Under the extended lockdown, people are restricted to their local government area and within 10 kilometres from home. Construction will reopen for non-occupied sites, so if you're living in your house while renovations are happening, the workers won't be back for another 4 weeks. That sounds very familiar to me. Tradespeople, including cleaners, who work with zero contact with residents, will also be able to resume employment, and a singles bubble will be introduced, allowing someone to nominate a friend who can come and visit. There were 8 new cases in Victoria yesterday, all of whom were fully isolated, and Queensland reported 1 new local case. Meanwhile, Qantas said it was exploring the option of mandating that all aviation workers get a jab. It has already strongly encouraged vaccination and is concerned that one COVID-positive worker could shut down a passenger terminal or a freight facility. Rio Tinto will return $9.1 billion to shareholders after the best 6 months in the miner's history. The group reported underlying earnings of $12.2 billion for the first 6 months of the year, and 2021 is likely to be its best ever. The announcement was made after trading finished in Australia. Shareholders will receive a total of $5.61 per share, twice as much as the previous biggest payout back in 2019. That's a dividend yield of almost 7%. Everyone expected a big dividend, but this was enormous. It came on the back of strong demand and prices for iron ore. Other parts of the businesses weren't travelling quite as well. Its copper, mineral sands and aluminium divisions have all been hit by varying challenges. The miner also said it would build a new lithium and borates mine in Serbia, investing $2.4 billion. Another day, another bid for a local company. A consortium involving the Ontario Teachers Pension Plan Board and private equity group KKR has upped its bid for Spark Infrastructure by 8%, or a 26% premium to its closing price on July 3. The board of Spark has opened the doors to due diligence, happy to consider the $5.2 billion offer, and that was enough to trigger a 5.4% jump in the group's share price yesterday. Westpac expects house prices to rise 18% across the country this year, including 22% in Sydney. And the country's second largest home lender tips that prices next year will rise another 5%. The bank was slightly less optimistic than National Australia Bank, which released its forecasts earlier in the week. Westpac said deteriorating affordability and tightening macro-prudential policy settings would restrain credit next year, and that would keep a lid on prices. Macro policy settings so far have remained unchanged in the face of surging house prices. But what Westpac is saying is that could well change. The man at the centre of nearly $400 million of fraud allegations by Westpac, Bill Pappas, is stuck in Greece with his girlfriend and can't afford to come home to Australia to face his accusers. According to the Financial Review, Mr. Pappas is pleading for money to allow him to return to Australia after nearly all the companies within the Forum group of companies, which he ran and were involved in equipment leasing, were placed into liquidation. The new car market has rebounded strongly, and car dealer AP Eagers said sales were up 28% in the first 6 months of the year. Its underlying pre-tax profit was $219 million versus $40 million a year earlier. China is introducing new policies to encourage families to have more children to address concerns about its ageing population. It includes new low-cost childcare, and market analysts are concerned it could also include price controls on food and drinks for babies. That's triggered a further sell-off in the share price of the A2 milk company, which has fallen nearly 12% this week. A2 used to sell much of its product to China via the Daigou channel, and that's pretty much dried up. It will be a long way back for the group. And as far as the Olympics go, 3 golds in one day for Australia was pretty impressive. The men's and women's quad sculls teams won, and Ariane Titmus was the first in the 200-metre freestyle. The withdrawal for mental health reasons of America's Simone Biles, arguably the greatest ever women's gymnast, from events has been handled really well across the board. Society has come a long way on that one. But my favourite moment from yesterday was the Fijian Sevens rugby team winning gold for the second time. Up next is our daily interview, and today we're looking at electric vehicles. Globally, momentum is building behind a shift to EVs. I'm talking to Alastair Doak from Mazda Australia about what this means for us here and how the industry is overcoming some of the challenges that might have put buyers off in the past. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Thursday, the 29th of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.